Hi, my name's Adam. Welcome to the channel. Thanks for joining us today. Today we're going to talk about something that's irked me since the day I got in the business. I've been in the business almost 17 years now, and this one thing has irked me from day one. I noticed it literally the first day I stepped into the office to start working as a financial planner, and it's been prevalent for 17 years, and I thought it would be gone by now, and it's not. And that is a discussion of fees, and more importantly, transparency around fees and fee reporting. Everyone pays something. Even on a platform like Wealthsimple where your trades are free, they're still making money on the exchange, the FX. So if you buy a US stock, you're actually making 1.5% each way, so 3%. So it's actually a huge percentage. People saying to me, no, Adam, I'm paying 0.5% for my investments and planning and all that at the bank. And I know that's not true because I've been in the business long enough. So we start breaking down the fees, and that's what I want to do in this video. If you haven't checked out our Investing Academy, we have partnered up with Brandon and Mark Beavis and their team at the Investing Academy. We've integrated our masterclass into there, our financial planning masterclass. There's a link below, $19.99 a month. If you're looking for a place to kind of up your investment knowledge, your financial planning knowledge, all of that, it's education for Canadians. Check out the link below. I promise you it'll help you going forward. So let's jump into the content. I just want to break down just a couple examples. And I think a lot of you, 80%, 90% of you, if you're at a bank or a major financial institution, there were some changes rolled out a few years ago on how they have to report fees to you. So every year you get what's called a CRM2 report, and that's a report at the end of the year. It says, here's how much in fees you paid. The problem is typically it only shows their portion of the fees or half the fees, or maybe not even quite half the fees. So you have to understand the full cost of your investments. And this is a huge issue I have with our industry. I think there needs to be way more transparency in our industry. We are very transparent. I put my fees right on my website. I get people telling me all the time, Adam, don't do that. Don't put your fees on your website because you'll lose business. Get people in the door, sell them on the services and everything you do, and then throw the price at them. And I think that's a terrible way to go about business. I think, look, here's the price. If it makes sense for you, then let's connect on a phone call, whatever it is. And then from there, if it still makes sense, then let's start doing business together. I think that's a better way. Same on the investing side. That's the way it should be. But that's the way it's not across the board. Pretty much every financial institution in Canada. And I'm going to pick on RBC here because this is an actual client. So clients at RBC, and they said, you know what, Adam, I'm only paying 0.5% for my investments. And I said, you know what, that sounds great, but I doubt you're paying 0.5%. Let's actually break it down. So they were in the RBC Global Balanced Portfolio Series F funds. Okay, and I'm not going to do a full breakdown on mutual funds in this video, but there's Series A through Z basically. So every investment company or every bank or financial institution, they'll have different series of funds. Series F is typically like an advisor series. That means that there's no trailing commission that's paid to the advisor. Now, the advisor also charges it for this client. They have a few $1 million. I'm just showing you one of their portfolios, but they're being charged 0.5%. Okay, so there's the Series F mutual fund and there's the advisor fee. And if we look on their statement of fees, you can see that they have about $236,000 invested in this fund, in this account. And when they get their compensation report at the end of the year, it said they paid $1,880 in fees, which is very inaccurate. That's just the advisor fee. If we back up and we look at Series F, so RBF 5716, it's the code. You can just Google this and you'll find the fund facts. So what you want to do is find the fund facts. And the fund facts breaks down the fund, how it's invested, and the total fees that you're going to pay within that fund. And you can see that this global balanced portfolio also charges 0.89%. So this client is paying 0.89% to Fidelity and 0.5% to their advisor, but they're not paying 0.5. So the client was just mind blown that there's an additional cost to the fund. But that's the reality. A lot of you think, oh, my advisor charges me 0.5% or I'm getting charged this. Or again, you get your statement that shows you paid $1,880 in fees this year. And that is the furthest thing from the truth. Now that example is kind of small scale, right? It's a few $100,000 account, still a big account, but again, the magnitude of the issue is smaller, right? They paid about $3,300 in fees where they think they paid $1,800. Still over $1,000 difference in what they thought they paid. The next one, this is a bit bigger account. RBC Monthly Income Fund Series F again, so we're looking at Series F, and RBC Select Balanced Portfolio Series F. So two Series F mutual funds. And again, the prospect came to me and said, look, Adam, I'm paying 0.5% in RBC, so that's just what I'm paying. And I said, there's no way you're paying that. So again, we did the full breakdown for them, and sure enough, so RBF 602, which was one of the funds, they're paying 0.74%. So a low cost fund, absolutely. 0.74, they're paying 0.5 to their advisor. They're still in a low cost environment, but they had no idea that they're paying that 0.74. So this video isn't about, are you paying too much or too little? It's about the transparency of the fees. You need to do your own homework most of the time on this. And this is unfortunate. Your advisor should be saying, look, we're charging you 0.5 or 1 or whatever it is, and the cost of the product that we're selling you is this. And this is what they're omitting 99% of the time. And they might have in their notes that they told you about it, but you don't remember because they threw it in mid-sentence. Get the breakdown for each one and make sure you get the cost off of the fund facts. That's important because that includes the TER, the trading expense ratio. And that on some funds can be like 0.1, 0.2, 0.3%. It can be quite high. It's typically 0.05 to 0.1, but it's an additional cost. Make sure you have that included in the total cost as well. So the other fund this client is in is RBF 658. And when we look at that, they're paying 1.02% on the fund facts. So again, they're paying almost 1% more on $1.3 million. Do the math, right? It's over $10,000 of additional fees. So when we did a breakdown for this client, they thought they were paying, I think it was around $14,000 or $16,000 in fees. And when we broke it down, it was about $44,000 in fees. 16 to 44, that's massive difference. A lot of times your advisor won't tell you, or you might even go to your advisor and say, hey, look, I watched this channel on YouTube and Adam said I should ask you about fees. So what are you charging me? And he's going to say, oh, I'm charging you 0.5%. Again, no transparency. You have to, okay, what is the cost of the product as well as what are you charging me? Again, these examples I've shown to this point are Series F, right? They're advisor series funds, so there's no trailing commission. What happens if you're in a mutual fund or a investment product that pays what's called a trailing commission? So the advisor is not charging you anything, but they're paid an embedded commission that's built into the product itself. So let's look at another fund. So this is, again, another client, and they hold the Fidelity Monthly Income Series B. And this is actually through a bank. So the bank had them invested in this Fidelity fund. And now they had a whole bunch of Series F funds, and then they had the Series B fund, and they had other stuff as well. But we often see this, right? Series FFFF, and the advisor charges a fee. And then you see a Series A or a Series B. When we pull up the fund facts, and I have it right here in front of me, this is my cheat sheet, I can see that the total fee is 2.14%. So the client is paying 2.14% on this fund. They thought they were paying 0 or very close to 0. On that same statement, if they looked at the bottom, it says they were paying a trailing commission. So when it shows, here's your fee report, you're paying $7,184. If you do the math quickly, $7,184 is not 2.14% of the account value, which is $600,000. That's only the trailing commission. They also pay, product fee on top of that. So they're shown one number, but the reality is they're paying much more. And this is the majority of you guys watching this video that are invested in mutual funds, even ETFs, some sort of investment product. You're paying way more than you think you're paying, and probably over double. So in this case with the Fidelity fund, the client was paying almost $13,000 a year, but they thought they were paying $7,000. And why? Because that's what their statement showed. That's what I would think too. If I was not in this industry, I would look at my fee statement and say, here's what I paid for fees. Like, what do I know? We have to start understanding that there's typically a few levels to these fees. There's the product fee, the mutual fund or the ETF or whatever type of investment you're in. There's a cost to that. There's a management or trading expense ratio, we call it, TER fee. There's a trading fee. Then there's the advisor fee. It's fine to pay these fees. In fact, like, we charge these fees sometimes for clients, and it makes a ton of sense. And again, this isn't about, are you paying too much or too little? It's understanding what you're paying. And that's step one. Once you figure out what you're paying, then you need to take the next step to figure out, am I paying too high? Am I getting value for what I'm paying? If you're paying 2.5%, the average mutual fund fee in Canada, when you add up all the costs involved, is 2.23%. Are you getting value for that? And a lot of you, what happens is you say no, and you jump ship to a DIY option. And what happens when you go to that option is you're still paying a product fee, you just cut out the advisor. If you're going to cut out that advisor fee, and go low cost DIY investing, you're cutting out a large portion of what you need. And maybe you're not getting it now, so I understand the jump to DIY, but you need to fill that gap of the advisor and putting a plan together, okay? Doing DIY investing is not gonna create a tax income estate plan for you come retirement. There is a point where you need to retire and you need to figure out how to kind of structure stuff. And because you've cut out the advisor, you need to at some point bring that in, whether it's an ongoing relationship, a fee for service, whatever it is. You need to make sure that you bring that back in. And again, if you're paying for it over here and they're not doing anything for you, which is the most common scenario, then for sure, definitely cut out your advisor if they're not doing anything for you. If there's no value here, either change to a different advisor or go DIY and hire a fee-for-service advisor. And again, we offer that service. There's other advisors in Canada that offer fee-for-service financial planning. If you're looking for kind of a plan, I can do it myself beyond that. I just need structure and that. Then you want a fee-for-service plan. If you're looking for more of an ongoing relationship with an advisor, I need a great plan, but I need continual updates and touch points and all this kind of stuff. Then you want an ongoing model. And that typically they'll charge an asset under management. So it'll be a percentage. And again, typically depends on your asset size. You're going to fall in between that 1.5% to 2% range. That's the range you should be in. If you're getting proper advice and a great investment solution, 1.5% to 2%. If you're hitting over kind of $1 million, $2, $3 million, it should drop down from there. And if you take anything from this video, look at your statements and break down every cost that you're paying and figure out, does this make sense for me going forward or do I need to make changes? So hopefully this helped you out. Thanks so much for joining us and we'll see you in the next video.